Yes, my dear. Yeah, hope this is audible. Yeah, let's get into accounting standard uh, 15, that is employee benefits. Okay, yeah. See, now let's start the subject. Yeah, before going to the subject, my dear, this is a small information. Yeah, my Google Drive classes are available, which are like related to advanced accounting, that is for CA Inter. This is for 1.8 views and 365 days of validity, including the book you are going to get at this cost. If you are interested, please contact these two numbers. And we are providing the even Google Drive classes, that is for CA final financial reporting. This is also same 1.8 views and 365 days of validity. This is approximately 200 hours of discussion and everything, even this CA Inter and plus CA final, everything the discussion has happened conceptually. Okay, that's for sure is going to be helpful to you. Okay, right. Chalo, let's go to the accounting standard 15, employee benefits. Yeah, what is this employee benefit? Who is employee? Correct now. Who is employee means every employee basically. What do you mean by every employee? Every employee in the sense part-time employee, full-time employee. Correct na? Even yes, it is like part-time employee, full-time employee, even casual employee, even the director. Yes, everybody is going to be part and parcel. And employee benefit in the sense, is it only for the employee benefit? No, not only for the employee, even for employee and employee family. Correct. Now, if employee yes, if the benefit is given to employee family, say example mediclaim. Correct. Now, mediclaim insurance is going to be given not for the employee alone. It is going to be given even for the employee family. Yes. So that is the basic concept, right? So it is applicable to everybody. Right. Which benefits is sir? Which benefit in the sense every benefit, whatever you give in the sense you may be giving it in cash, you may be giving it in kind, correct? Now you may be giving it in perquisite, correct? Now yes, perquisite, whatever, whichever the fashion you are going to give a benefit to the employee, that's going to be covered by this standard. Okay, next. And sir, if this employee benefit is supposed to be statutory, correct? It may be legal. Yes, it is a legal compliance. Say example, gratuity. Gratuity, why are you giving it to the employer? Why are you giving it to the employees? Because it is said as per the law. Agree? Yeah. So just a second. It's not able. Just a second. Yeah. So if it is something legal, correct? Now legal obligation, yes, legal obligation also is going to be covered. The only legal obligation. Right, even though it is what do you say, constructive obligation. This is something new word to you, that is I have discussed it under accounting standard 29. I have given a light introduction about it. Constructive obligation, what is constructive obligation? Even if it is not as per the law, if the company has decided and company has announced it, correct? Now what did I say? Company has decided the same, at the same time company has announced the same. Yeah, so under that circumstance, yes, this is going to be, got my point? Yes, it is going to be there, right? I mean, this is also going to be covered by the standard. In the sense what, sir? Suppose example, leave encashment. Okay, leave encashment. If I say is it leave encashment as per the law? No, not necessary. Okay, right. Law, as per the law, it is covered by only some number of employees, not for every employee. Right. So, but what are we supposed to do with respect to that? Yes. How is it? It is a policy which is declared by the company. Okay, as per their HR policies, they have declared, and it is announced to the people. Announced to the people means to the employees. It is already announced. Yes, such kind of benefit, even though it is not as per the law, also still it is going to be covered by the standard. Okay. Next point. Next point, there are totally four types of employee benefits, my dear. What are the four types of employee benefits? How are you supposed to account for the same? That's all I am going to explain it to you. Right. So the first concept is equal to short-term employee benefit. Yeah, this is short-term. Okay, that's so when do you say it is short-term employee? Right. First, let me close it. Short-term employee benefit. Second one is equal to long-term employee benefit. Third one is equal to post-retirement employee benefits. And the fourth one is equal to, that is called termination benefits, TB. Okay, termination benefits. Yeah, these are the names. Sir, what is this? What is this? What are these things? Correct. I'll just explain it to you. See, first, before getting into the concept, no, do you remember the basic concept of, what is the basic concept? Basic concept of accrual, matching concept. Correct. Yeah, matching concept only exactly you are supposed to follow in accounting standard 15. How matching concept? I'll explain it to you. See, this is my financial year. Okay, what is this my financial year? 2023-24. Okay, see, there is one Mr. X. Okay, has he worked in the current financial year? Yes, he worked in the current financial year. Right. So when he has worked in this current financial year of 2023-24, whatever the benefits, correct now, whatever the benefits we give it to him, that has to be charged in the current financial year itself. Maybe payment may be taking, you may be making a payment, correct now. Suppose example, this guy has joined 1/4/2023, he joined the company. Assume he will be working there for 6 years or 7 years, he is going to work. Are you getting my point? Yeah. Just a second. Once again, this is started. Don't know what to do. Sorry, just wait for a few seconds. Yeah. So this guy is going to, correct now. This guy is going to work. Assume he's going to work it. Well, I mean, he is going to be there in the company for 6 years. Agree to it. So now, when do you make a payment for a salary? When he works in the current year, then salary will be paid almost in the same year. Maybe except for the March month, where he may get a payment only in the April month. But some payments, what will be happening? Correct now, gratuity. Gratuity, will it be paid? Yes, it will be paid once he leaves the employment. Agree or not? Correct. So again, leave encashment also, he may be getting it later point of time. So there are so many circumstances, correct now, right? Where he worked for in the current year for this service, he may be getting paid at later point of time. Right, we are not going to account for at the later point of time, because if you account for at the later point of time, it comes to, it is going to be considered as not accrual accounting or mercantile accounting, it is going to be considered cash accounting. Correct now. So what are we supposed to follow, my dear? Accrual accounting you are supposed to follow. Correct. He worked here, he worked in the sense, what does it mean? It is accruing to him in the current financial year. Maybe payment may be taking place at a later point of time, that is irrelevant to me. Getting my point? Right. So that's why, what are you supposed to do? Yes, you are going to recognize, correct, accrual in the sense we will recognize the payable. Right now we will say payable is going to be recognized in the current financial year itself. Now listen to me, he worked in the current financial year. If he is going to be paid within 1 year only, let me say this is 1 year. 1 year from where? 1 year from the balance sheet date. If it is going to be paid within the, it is expected to be paid within the 1 year balance sheet date, correct, then it is going to be called a short term employee benefit. He worked in the 23-24, if it is expected to be paid in 24-25, then it is going to be called as short term employee benefits. Got it? Correct. Sir, he worked in the current year, but if the payment is going to be expected to happen after, at later point of time, not in within 1 year, sir, after 1 year. Okay, the payment is going to be, correct, payment is going to be expected to be paid as per the agreement or whatever the reason. Then this kind of, these things are going to be called as long term employee benefits. Okay, sir, he worked in the current year, sir, but for this it is going to accrue it, but we are going to make a payment after. This is the retirement, or he left. Okay, it may be retirement, or he may be resigned the job. Okay, if it is expected to be paid after the retirement, then it is going to be called as post employment benefit, post retirement benefit, post employment benefit. Any word you use it, I don't think too much about it. Got it? Right. Try to understand, my dear. Short term employee benefits, long term employee benefits are going to be paid when the employee is in employment. You understood my point? Yeah, when he is there in the company, that time we are going to make a payment. This post employee benefits, when do you pay? After leaving the employment. You have to resign it or you have to retire, then only the amount is going to be paid. In the same fashion, even termination benefits also, my dear, termination benefits also going to be paid when once you leave the entity, then only termination benefits are going to be paid, right? So this is the basic. So I just repeat it for one more minute. Worked in the current year, it accrued to you in the current year, but payment is expected to happen within 1 year from the balance sheet date, then it is called short term employee benefit. If the payment is expected to be correct, worked in the current financial year, but the payment is expected to be paid after 1 year from the balance sheet date, then that is called long term employee benefit. Okay, you worked in the current year, but the yes, you worked in the current year, payment is going to happen not now, payment is going to happen after retirement, then it is retirement employee benefit. Termination benefit. Termination benefit is not going to be given because you worked. No, that I'll explain it to you. When I come to the situation, I'll explain it to you in detail. Right. So termination benefits are given because you're leaving the entity. Leaving the entity in the sense it may be VRA situation, voluntary retirement scheme. Yes, company has offered you something. Arabas, if you leave, I'll pay you this much of amount. Okay. So if they offer you, correct, now you accepted, employee accepted. So then accrual comes in. Accrual comes to with respect to retirement benefits, not because you worked, because you accepted to leave the entity. That's why it is going to be paid. Anyhow, I'll explain it to you in detail. Right. So have you understood so far? Perfect. Chalo. So now the question is simple. Okay. Right. So the first situation is equal to short-term employee benefits. Yeah. Let us handle this small thing. Short-term employee benefits means what, my dear? What is that simple word I said? It is accrued. Accrued in the current year. Accrued in the current year. But what about the payment? But the payment is expected. Okay. What about the payment? Payment is expected to occur. Payment is expected to occur in the next financial year, next year, correct? Now next year in the sense within 12 months from the balance, this is within 12 months from the balance sheet date. If you are expected to pay, then that is called short term employee benefit. Agree? Correct. So since it is going to be when are you going to pay, my dear? You are going to pay within 12 months time. So that's why, my dear, since it is going to be paid within 12 months, undiscounted or no discounting, no discounted, correct? Now we are not going to discount it. No discounting or no present value calculation we are going to perform. We are not going to do any present valuation. Discounting concept will not come. Correct? Because 12 months ka discounting, it will not be a great number. Right? That's why we do not do it. Sir, how do you account for the short-term employee benefits? Yeah? Listen carefully. Short-term employee benefits. Right. I will say from the balance sheet angle is one. At the same time, from the P&L angle is another one. Agree, right? So from the balance sheet angle, what do you do, sir? Very simple, man. From the balance sheet angle, okay, is it already payable? Yes, sir. It is not yet paid, sir. Oh, is it not payable? Then regard the liability. That's all. What are you supposed to do? Yes, regard the liability. Yeah, what is it, sir? Simple here. March 1 salary is there. Is it paid? No, sir. April 1st you will pay, sir. Not a problem. So under that circumstance, what do you record? Sir, salary expense account debit. Correct na? Salary expense account debit to salary payable. Correct na? It is not. It is going to be paid within 1 year. Next day only. Correct na? Then it is. Sir, is it paid? Sir, paid excess. Okay, you paid excess. Yeah, excess payment. Generally, it won't happen. Okay, general information. If it is paid excess, what is it, my dear? Isn't it a prepaid? Is it a prepaid asset? Yes, it is a prepaid asset. Prepaid asset account debit to cash. Correct now, because you must have paid excess. Excess pay kiya to asset. If you are not paid it, recognized as a liability. Obviously, this liability payable is going to be a current liability. Agree? Correct. So, sir, what about the P&L? Yeah, see here, salary expense karke I did it. So what do you do generally, my dear? Salary expenditure, any generally what will happen? It will be charged to profit and loss account. Agree? It will be charged to profit and loss account. But in some cases, what happens? Not necessarily every salary expenditure should go to P&L. Right. So some cases exceptional. If it is permitted by the accounting standard, another accounting standard. If it is permitted by another accounting standard, sir, what do you do? Yes, it can be capitalized. Generally, it will be charged to profit and loss, my dear. But sometimes it will be capitalized. Sir, how will it be capitalized? Yeah, yes, guys. Suppose there are some scientists are there. Who are there? Scientists. What are they doing? Sir, they are doing development. Development of what, my dear? Development of some intangible asset they are developing, sir. Yes. So you should have some basic knowledge about accounting standard 26. Yes. If you do research and development, research cost will be charged to P&L, but development cost subject to 6 criteria, which is given under accounting standard 26. Can you capitalize it? Yes, you can capitalize it. Subject to the 6 criteria that I don't discuss right now. Okay, that you should have studied or you are going to study that. Now, what are you supposed to do with this, sir? This is going to be capitalized. What are you supposed to do, my dear? Capitalize karna. Means what? Yes, if it is a scientist salary, this, yes, there is a team of scientists. Some 10 people are there. 10 people ka total salary, which will be, what do you do, my dear? You will be recording not as a salary expense account, intangible asset under development account, debit to cash or bank, whatever you gave it to them. Yes, because it is under development. Correct. Sometimes. Okay, suppose I have been employed for what? For installation of one machine ke liye, okay, whatever. My 100% efforts are with respect to the installation of machine. I can capitalize that one. Got it? I can capitalize my salary, my job itself. Why did you appoint me? That I have been appointed only for the purpose of this installation. If this installation is not there, they would have not appointed me. Then yes, my expenses, my salary expenditure is directly attributable to the specific machine. That's why this salary is going to be capitalized. Okay, yes, that's all. So here, that's what I'm telling. Generally it will be charged to P&L, my dear friend, but under some circumstance, got my point? Under some circumstance, what's going to happen? It can be capitalized. Is it correct? Yes. Why not? 100% correct. It can be capitalized. Let it be capitalized. Got it? Perfect. So that's, is it, that's all, sir? Not that's all. One more some sub concept is there. That is called leave encashment. What is it, my dear? Leave encashment. Sir, in case of leave encashment, there is one more one more word is there, that is compensated absences. What is this called? Compensated absences. Yes. Yeah. This is the accounting standard terminology. Leave encashment is our terminology. Okay. Yeah. But every time encashment will not happen. Encashment means where you are supposed to pay the money. Okay, sir, how will you account such kind of thing? Is it supposed to be accounted for? Yes, yes, 100% it's supposed to be accounted for. Correct. See, simple example I'll explain you. Right, say one employee ko, what is the number of holidays they are giving in addition to Sunday, Saturday and etc. Suppose there are 30 days are there. 30 days are there in the sense 2.5 days per month. Some companies will give, not every company will give. Okay, 30 days are the days we are giving it to you. Correct. Sometime what happened? Correct. Now what is that utilized? How many holidays I have taken? For example, I have taken 20 days of holiday. So that means E 10 days of holiday. E 10 days is what? E 10 days I have not utilized it. Correct na? Right. So now the question, next question should come. E 10 days, can I carry forward and utilize it in the next year? Whether my company permits it, it is company. It is not as per the law. Got my point? Or some companies, what do? They'll make a payment for 10 days. 10 days you did not utilize. That means you worked here. So for the 10 days you take salary. Okay. That is one. Some people, what they say, what they do, see, current year 10 days you did not utilize. So, sorry, next year ka 30 days will come normally plus E 10 days. Totally 40 days you enjoy in the next year. That also will happen. Some other companies will be, well, what they will do, Are boss, you did not utilize. That is your problem. I will not pay you 1 rupee. I will not allow you to carry forward also to next year. That option also they will not give. So there are three circumstances which are coming out. Correct. Now, what are the three circumstances, my dear? Three circumstances. I'll put it here. Okay. Yeah. What is the situation? No benefit. Okay. No benefit. No benefit. What do you mean by no benefit here? You will not get, correct, no payment. I mean to say no benefit in the sense what? No payment and no carry forward. You cannot even carry forward also. Got my point? Yes. If you say no payment, no carry forward, what is there to account for? That means, am I liable? Is the company liable to pay you? No payment, I told you na. That's it. So then how does it anything accrue to me? No accrual. Correct. Now that's why no accounting also you are supposed to do it. Agree? Next. Sir, we'll make a payment. Yes, leave encashment. Yes, encash. You can encash it. Okay, encashment is going to take place. Policy. If the company, this is situation number 1, situation number 2, this is situation number 3. Situation number 3, simple. Correct na? Nothing. Company, if there are 30 days, you did not utilize 10 days, means that is your problem. Got it? If under that circumstance, correct na, payment, understand, if you are going to make a payment under that circumstance, suppose this is related to which year, sir? Let us say this is related to 2023-24 financial year. Agree? Yes. So what are you supposed to do? 2023-24 financial year, we'll record one journal entry. What is a journal entry? Yes, leave encashment expense account debit. Yes, expense account debit. What is this? This is nothing but 10 days ka salary. Don't worry, he will give you some information in the question. So that you just need to follow the same points. Agree? Okay, leave encashment account debit. Got it? Leave encashment account debit to what is that? Leave encashment payable. Yes, whatever the amount, correct now. What is 10 days ka salary? You just need to calculate per month salary they will give. 10 days salary you calculate, and that is going to be there. Correct now. Then what will happen in 24-25? 24-25 payable account debit. Correct now. Payable account debit to cash. Yes, they will make a payment of this. Got my point? That's it. This is leave encashment hai to you will make a provision. You will make a provision. Correct na? Yes. This is nothing but provision. Provision is nothing but payable. It is already decided. So that's why it is going to be payable. The second situation is what? Second situation is equal to carry forward situation. What is this, my dear? Carry forward. Carry forward in the sense what? Correct na? 2000 to 2023-24. Has he got 10 days of leave? Yes. So what will happen in next year? 2000, this will be carry forward to which year? 24-25. He is going to carry forward. So in 2024-25 ka, correct now, what do I say? Opening balance of holidays, how many? 10 days. Plus current year in the sense that is to 24-25 ka 30 days as usual will come. Every year 30 days holidays, na? Correct. So he 40 days. Can he enjoy 40 days? Yes. Actually, as per the agreement, he can enjoy all the 40 days of subject. All the 40 days he will be able to enjoy. But will he be able, will he really enjoy? That's a doubt. Correct na? Will he enjoy? Sir, my manager is not giving holiday to me. Then how will I enjoy? You may not be able to enjoy. Got it? Now, what are you supposed to do? Just observe here carefully. Observe this accounting. Yeah. So this is the accounting. Okay. Right. Again. See, my question is what? 1 year. What is that? It's going to happening, my dear? It is going to be carry forwarded. How do? It is carry forward for how many years? Only for 1 year. That's all. If it is only for 1 year, then only it will become short-term employee benefit. No, no, sir. You can carry forward for second year, third year, fourth year, whichever year you want. Correct na? If it is for more than 1 year, my dear, then it is not short-term employee benefit, amma. It is going to become long-term employee benefit because you are going to get the benefit out of it because you worked in the current year. The benefit is going to come after 1 year. Then it is not short-term employee benefit. It is a long-term employee benefit. I hope you got it. Yes, exactly. So now the question is, what is this question, my dear? Concentrate 100%, then you will be able to understand it in first shot. 23-24 financial year. Correct na? Yes. See, generally 365 days holiday. 365 days. Okay. Say some 65 days are normal holidays. This is normal holiday. Sunday, Saturday, something like that. So actually you should work 300 days. But out of 300 days also 30 days I am giving you holiday. Correct. Now what am I giving? 30 days I am giving holiday. So 270 days is what you are supposed to work. Have you understood my point? If you assume that all 30 days you have utilized, 270 days you are supposed to work. Now situation is, suppose you have taken only 20 days holidays. Agree na? 20 days holidays you have taken in the sense, you have worked for how many days? 280 days you worked in the current financial year. Agree na? Correct. Suppose next financial year I will go 2020. Correct. Here you worked for 10 days extra. 10 days extra work you have done. Perfect. Listen carefully. 10 days work extra you have worked means 10 days of company must have got benefited 10 days extra work. Yeah, obviously every hour is important, every day is important. Correct now, like you, some 100 people have worked. Correct now, 100 into 10 days, correct now, it's how much work must have happened. Right. So remember that. So the benefit to the company has come in the current year. Right? Remember. Next year what is happening? 365 days, normal 65 days holidays will come to 300 days. Assume this man utilized all the 40. All the 40 utilized in the sense he is working for how many days, my day? 260 days. He is working lesser number of days here. Agree? Yeah. Right. Listen carefully. Suppose he is getting 10 lakh rupees salary in the last year and 10 lakh rupees salary in the current year also. Both the sides 10 lakh rupees of salary. Now try to understand and imagine correctly. So 10 lakh rupees salary is going to be booked in the first year where he worked 280 days. 10 lakh rupees is the salary what he is going to be, he's going to get, we are going to book as an expenditure where he worked only 260 days of work. Agree or not? Is it correct? Correct. Now, where he is working more number of days, there you are charging same amount of salary. Correct. Now, where he is working less number of days, there also same amount of salary. This is not matching. Agree? That's why what are we supposed to do, my dear? If the employee has got an option to carry forward for one more year, got my point? If he has got one more year of carry forward option, what do you say? Normal salary expenditure you book. Correct? Now, normal salary. What is the normal salary expense? Okay, salary expense account debit to cash 10 lakh rupees, 10 lakh rupees you booked. Yeah, here also you book 10 lakh rupees, 10 lakh rupees now because you have to pay 10 lakh rupees of salary. That you cannot argue and discuss. Correct now. In addition to this, what are you supposed to do here? Correct now. Right. So salary expenditure, employee benefit expenditure only, whatever it is. Okay. Yeah. Just to say some provision, you say. What is this provision? Assume. Okay. Assume. He's going to utilize all the 10 days. 10 days has he worked extra here? Correct. Next again. Think carefully. How many days practically it is possible for him to carry forward and utilize? This question you have to ask yourself. Shall I repeat once again? I repeat. How out of 10 days of correctness, if you ask me, Ravi Kanth, do you get holidays? Yes, I'll get holiday. Will you be able to utilize? It depends on the work. Correct. Now, sometimes some year it will become too much hectic work. Even though holidays are there, I will not be able to utilize it. Got it? Practically, there will be so many issues. Correct. Now, holidays are there, but it will become namesake for many times. So, really, is it possible for you to enjoy 30 plus 10, 40 days? May be possible, may not be possible. Assume if it is possible. How many days possible? 10 days possible. Then 10 days ka salary you make a provision here. So now salary expenditure is on the top also debited, down also debited. So 10, this is for the 365 days, 300 days ka salary plus 10 days ka extra salary. Correct na? So current year my expenditure of the P&L is going up. Correct? Next, sir, I think only this guy will utilize maximum to maximum 4 days only he can utilize, sir. 6 days waste only, sir. Oh, is it? If it is going to be wasted, then you have a data. Correct? Now, that cannot be done by me and you. That has to be done by the company. How many days that is practically possible to utilize by the employees? They should consider the previous data. They should come to some average and they have to estimate it. Accordingly, they should pass a journal entry. Got it? Yes. So 4 days of salary, 4 days of salary, something like that. Done. So whatever you make a provision here, correct? The same thing. What are you supposed to do in the next year? Next year में क्या करना? Reverse करना. Reverse करना. So what is the journal entry? Provision account debit to salary expense. Okay na? Provision account debit to salary expenditure. Same amount is going to be reversed. Say example, this is a 40,000 rupees, something like that. Simply I keep it. So what is my salary expenditure of the current? This is 23, 24, my dear friend. 10 lakh rupees plus 40,000. 10 lakh 40,000 rupees. Correct. How many days has he worked? 280 days he has worked it. Correct. Now next year what is happening? 24, 25 days of, correct. Now 24, 25 days of work. In this 25 to 24 days of work, what is happening? 10 lakh rupees salary expenditure is reduced, na? Correct. So minus 0.4, that is equal to 9.6 lakh rupees only is happening. How many days has he worked exactly? 260 days only he worked. The lesser number of days worked, lesser amount of salary is booked. More number of days worked, more amount of salary has been booked. Now does it make sense? That's why that accounting concept is relevant and very, very, very important. Hope you understood. That's all, my dear. This is about short-term employee benefits. Okay, chalo. Let's go to the next concept, not long-term employee benefit. Next concept is fourth bit I will explain you, which is termination benefit. What is this, my dear? Termination benefit. Yes, termination benefits. What is termination benefit? Termination benefit, it does not accrue. First concept, what is that? It does not accrue. It does not accrue during the work time. Correct? During the working. Simple example, common sense concept. Okay, you don't need to apply too much brain for this. What is that common sense concept? Observe, my dear. See, this is the period. Okay. How many years you worked, sir? Sir, I worked in the company for 5 years. Okay. Today, last day, or whichever someday. Which day, yeah? Sir, this is equal to, sir, this is 31st March 2024, sir. Excellent, sir. Today, what has happened, my dear Ravikant? Sir, company has given an offer. Which is the offer? VRS. Arey Ravi, you became old man. Okay, so 50 plus years you have become already. I am not here actually. Okay, right. Okay, 50 plus years ho gaya. Arey bas, if you are interested, you leave. No. Okay, sir. Right. I will leave. I will leave, sir. But family is there now, sir. Correct, na? Obviously. I understand, Ravi. No problem. If you work for 10 years, how much do you get? If you work for 10 years, say example, someone round figure, some 2 crore rupees you will be able to earn. If you work, correct. See, I'll give an offer. I'll give you 1 crore. You get out. You don't need to work even. Without working, 1 crore rupee will come. If you want to join any other company or you want to give some consultancy, you want to teach like this, you teach. That is that we don't disturb you. You leave. That's it. Good or no? Good or bad, that is person to person will depend. That is not my problem and your problem. Correct na? See. Now 1 year I have correct now 1 crore rupee correct now. I don't need to work for anything. 2 crore rupees plus me 1 crore rupee will come. If 1 crore rupees is paid, is it because I worked with them for 5 years? Not for the work, not for my past working. It is offered by them because I am leaving the company. I agreed to leave. Agree my point. That's why here there is no concept of correct na. You cannot say it is accrued in the current year. Kaisa accrue karega re? It accrues only on the date on which Ravikant agreed to leave the company. Agree? Right. If I leave the company, that time yes. Hope you understood. So the termination benefits will be accrued only on acceptance of the offer. Sometimes what happens? Retrenchment. You must have heard this word retrenchment in the income tax. Correct now? What is retrenchment? Layoff. That's all, nothing else. Nowadays, this is you must have heard this layoff. Company will just throw you out. Yes, Google throwed, Amazon throwed, everybody, almost all big companies, thousands of employees could they removed. That's okay. That is a different concept. Okay. Suppose I'm throwing you out. What is generally happens, I'll give you an advance notice. 2 months before I'll give you an advance. But after 2 months you will not be here. Yeah, you search for some other job. No problem. 2 months salary I will give. But some companies what they will do, na? Hey, Papa, this guy has worked as for so many years with me. Correct, na? If I can 2 months salary, then that is not a problem. In addition to 2 months salary, let me give him 1 year salary, yeah, because he also need some correct. If he does not get a salary because everybody is throwing out, nobody is taking a new jobs are not coming only. New jobs are not there in the market. He will face a problem. So he worked for so many. I am very kind enough. 1 year salary freely I'll give. Leave after 2 months. The 2 months salary will come plus 1 year salary also will come. Correct na? Are you getting my point? Yes. So under retrenchment also I'm giving you 1 year salary free of cost. How to account for this? That is what termination. This is called termination benefit. Termination benefit arises under the VRS scheme, under the layoff also. Okay, if the company is liable to pay you. Okay, now next question. Sir, when is the next question should come to your mind? When to pay? Correct na? When to pay means they must have already agreed upon with the company and employer must have already discussed about it. Without doubt. When to pay? Sir, within 1 year only. Correct na? Sir, within 1 year, within 12 months only you are going to pay. If you are going to pay within 12 months, no, my dear, obviously no discounting. This you remember, a simple concept. If the payment is expected to be paid within 1 year as per the agreement, no present value concept. No, sir, that is a big number, yaar. Ravikant is not the only one guy. Correct na? 5,000 people I have given a VRS option. 4,000 people have accepted to it. So 1 crore is for Ravikant. Assume all are Ravikant's only. 400 crores I am supposed to, 4,000 crores I am supposed to pay. Correct na? 4,000 crores payment will I pay immediately? Yeah. If I make immediate payment, working capital issue will come. That's why we will enter into agreement. Are bus 25% I will pay now. Remaining 21st next year. Some 3-4 years ka time we have taken. Are you getting my point? If it is greater than 1 year, what are you supposed to do? Yes, you are supposed to do present value. That is called discounting concept. Yes, you are supposed to do discounting concept. Next, basic common sense, and this is important to remember in this accounting standard 15. Whenever I use the word discounting, which rate I should apply? Which rate should apply means government of India bond yield rate, not coupon rate, my dear. It is yield in the sense effective rate of return. Okay, In reality, how much are you getting? Because after considering the compounding impact, what is the government of India bond yield rate you are supposed to consider it here? Agree? I'll explain it to you. Okay. Next, sir, what is that going to happen? Say example, my dear, 100 rupees is going to be paid in the current year. Since it is going to be paid now, correct? Now only you are going to pay. So what is the present value? Present value nothing, zero. Okay, sir, next 100 crore rupees, when are you going to pay? After 1 year, correct? After 1 year, in the sense, what are you supposed to do? This is at the end of the first year. This is at the end of the second year. This is at the end of the third year. How much are you going to pay? 100, 100, 100, like that. Okay, four payments. So what is the year? This is year 0, year 1, year 2, year 3. Correct. So what is the government of India bond yield rate is equal to how much? Government of bond India, just take some percentage which is equal to 10 percentage. Let me get my calculator. Yeah. So what is the 10% in the sense, what will happen? That is equal to 0.909. Correct. Now present value factor I will record. Yeah. Next is equal to 0.826. This is equal to 0.751. Okay. Now present value concept. 100 into how much is this? 100 rupees, sir. Over 100 into this is equal to 909 rupees. This is equal to 826 rupees. Correct na? This is, you got my point, 90.9, sorry, 82.6. This is equal to 75.1. Yes, let us total it. So 100, correct, 100 plus 90.9 plus 82.6 plus 75.1. Yeah, that all comes to 348.6. Correct. When did it accrue? When did accrue means when I accept. When did you people accept it? Today only accepted. Then you record no termination benefits account. This is expenditure. Termination benefit expense account debit. Two words are two provision. Yeah. So just first you say 348.6. 348.6. Yeah. Which date this is? Say example 1/4/2024. On 1/4/2024 only are you making a payment of 100 rupees or not, my dear? Yes, sir, I am making this first 100 rupees. I am making today only. Now, correct? Yes. So payment means what? What are you supposed to record? Then provision account debit. Provision account debit to what? Cash. You are going to clear 100 rupees, 100 rupees. Agree na? Correct. Sir, now 1 year over, sir. 31st March 2025 has come. Right. Now try to understand, my dear. What is the liability? What is the provision which is left over here? Out of 348.6 minus 100 rupees you made a payment, so that means 248.6 is there. Agree? Exactly. So out of this 248.6, correct now, 248.6 may what you should do, right? What you should do, you have to add the interest element. What interest element? Why should I add interest element? If you remember your accounting standard 29 concept, yes, accounting standard 29. Accounting standard 29 mein what did we say? Correct? Yeah, if you discount it, what are you supposed to do? Unwinding karna. Correct na? Have you heard the word unwinding? Yes. UNWINDING, unwinding. Unwinding. Yeah. Which rate I should do unwinding means which rate you discounted for, same rate you are supposed to do it. So that's why, what are you supposed to do? Interest expense will record. But the interest expenditure is not a finance customer. Okay, na? It will not go to under P&L mein finance expense mein, no, it won't come. The interest expenditure is also going to be part and parcel of employee benefit. Under employee benefit, you know, in the profit and loss mein, employee benefit expenses, under that only interest also will come. Got my point? Yes. How much amount, sir? How much amount in the sense? 248.6 into 10% is the rate, na? Yes. So that is equal to 24.86 will come, which I rounded to 25. So what is the entry, sir? Entry is equal to simple, that is interest expense account debit. Yeah, interest expense account debit to provision. Yes. How much? 25, 25. Next day, 1/4/2025. Are you paying 100 or not? Yes, we are making a payment of 100. Provision account debit to cash or bank, whatever the number, that is equal to 100. Next, 31st March 2026. On the remaining amount, how much is remaining? Tell me. 248.6 plus 25, because you added the provision and you reduced it by 100. Correct na? Some number will be left over. On that again 10% you are supposed to calculate, and you are supposed to do that. Hope you are following me. That's all. This is about your termination benefits. If it is expected to pay within 1 year, I said no, present value concept. Simply without present where 100 I promise to pay you na. Yes, termination benefits account, expense account, debit to provision 100 rupees. When you make a payment, provision account debit to cash 100 rupees, 100 rupees. No discounting, nothing is going to be done. That's it. I hope you understood. Right. The next concept is second concept. That is long-term employee benefits. And next is what, my dear, post-retirement benefits, post-employment benefits, post-employee benefits. My dear, for your information. Okay, na? Right. What is the your information, sir? Information is very simple. Both are 100% same. Accounting wise, it is same. Concept is different. Accounting wise, it is 100% same, amma. So you don't need to worry. I'll explain you to some extent in this session. Remaining tomorrow or day after, even though it is working day, at least half an hour, 45 minutes, I'll take it tomorrow or day after. I'll close this standard for sure. Okay, na? Right. Tomorrow only I'll try to close it off. Right. Yeah. So long-term employee benefits, post-retirement employee benefits. Got it? Yes. Long-term employee, both are one and the same. Accounting wise, there is no difference at all. Now, for making you understand better, actually, even in the standard, no, they have not explained what is long-term employee benefits. What they said, for long-term employee benefits, all the above paragraphs remain same. That's all they told. Even in the standard, main standard only they told like this, not told by Ravi Kanth. Next, sorry, 4 classification Ravi Kanth did. No, my dear, Ravi Kanth did nothing. The 4 classification also done by them only. Got it? Yes, exactly. Right. Now the question is, yeah. Now the simple question, sir, post-employee benefits. What are post-employment benefit? Means once you retire, you will get the benefit. Today will you get? Sir, today I will not get anything. What are the example, my dear? Provident fund. Yes, provident fund. When do you get money? Once you leave the job, then you will be able to get it. In between, I will get from the provident fund, that is called loan. That is that is not the benefit. Okay, na? Right. So that's all. Not that's all, my dear. Gratuity. Yes, once you leave the company, if you work for the 5 years of the 5 years with the company, and once you leave the company, then you will get the gratuity. That's all. Not that's all. In addition to the gratuity, what is that we call one pension? Pension also. Pension also will come when after you leave the employment, you will get the thing. Got it? Yes. So there are some benefits. Medical benefits also will come, Nana. Medical benefits. Yes, my dear. There are so many benefits. If you are working in, if your parents or somebody of your relatives working in the central government, na, suppose somebody retired after 60 years of their work life. Correct, na? 60 years they worked and they left. So now what will happen? See, maybe in the till 60 years you may not be getting the medical problems. After you leave only you may start getting medical issues. Correct, age factor. So then who will help me that time? I'm not in employment, na? Nothing to worry. Employer will take care. Right. Depending upon your position, cadre, they will say 50% of your post-employment benefits I will bear. The companies will bear. Understood? You left the company, correct, na? Right. So, say 65th year, somebody, some has some surgery, something 10 lakh rupees expenditure he has to incur. He'll go to hospital, he'll incur the expenditure, he'll give the bill to the company or the insurance company, he will submit the bill. That insurance company has to give you 5 lakh rupees. For that, who will be giving? Already company must have deposited the money with the insurance company. Not now I am paying it. Right. So many benefits will be there. So many are there, my dear. These are all not there as per the company. These are not there as per the law or as per anything, my dear. It's there. Right. Sorry, sir. Not a problem. So now the question, very simple question. What is that? Just a second. Just a second. Just a second. Yeah. Yeah. So in case of provident fund, in case of gratuity, in case of pension, what all it happens? Right. See, if you understand this correctly, that is post-retirement employee benefits. This accounting will be exactly replica. Same thing is going to happen with respect to, correct, where it is going to happen. Yeah, it is going to happen in the long-term employee benefits as well. Okay, sorry, sir. Now the question. So let's start with how do you account for such a thing? Perfect. Now, see, post-employee benefits. Okay, now post-employee benefits are going to be classified into 2 types, my dear. What is that? One is called a DCP. What is DCP? This is a defined contribution plan. Okay, I will write it. Defined contribution plan. Yeah, what is defined contribution plan? I will explain you that. Next is DBP. Okay, this is defined benefit plan. Defined benefit plan. Okay, DCP, DBP. Got it? Yeah. What is it, sir? Defined contribution plan in the sense, ma, I'm the employer, company. Okay. What is your job? Nothing, sir. Once I make a payment, no. You understood my point? Once I make a payment, my job is over. Understood? Means what? Once I make the payment to whomever it is, my responsibility gets over by making a payment, contributing. Okay, I will write responsibility of employer. Yeah, responsibility. Yeah, responsibility of employer gets over with contribution. Once I make a payment, contribution over. Correct na? And just to emphasize, my dear, employer does not have what he does not have, two risks. What are two risks are? One is called investment risk. We call, what is that called? Investment risk, actuary risk. Okay, not a problem. One is investment risk and the next one is actuary risk and the we call. Okay, actuary risk. What is this risk? What is that risk? What is investment risk? I contributed to someone. What has happened to that money? Is it giving earning properly returns? I don't need to care. Is that fund there or it's already died last? I just don't need to care. No investment risk, correct na? Where should I invest? If I invest here, will I get good money? If I invest there, will I get good money? Your headache not there. When it is not there, then you say you don't have any investment risk. I don't have any investment risk with respect to contribution plan. What about actuary risk? Actuary risk in the sense, see, how much I should pay? Okay, this much. Now, correct now. I mean, right, say employee gets more salary, he got the promotion. What will happen in the future? I don't need to think. Actuary risk in the sense estimation, amma. Actuary in the sense, what does actuary does? It does estimation basically. You don't have an estimation mistake. Sorry, if I have done, what estimation is there? Yeah, best example, I'll explain it to you. Provident fund. You have not studied this provident fund as part of your syllabus. When I was studying, it was there in my syllabus long ago. Okay, 2003 matter I am talking, not today's matter. Okay, 20 years before matter. Yeah, I don't know whether you born that time or not. Right. Okay. So now provident fund. With respect to provident fund, what will happen, my dear? Something like basic plus DA. Correct now, basic plus DA. On that, you are supposed to put 12%. You are supposed to contribute. Okay, some number. There are some minimum amount, max. So many things are there. Forget about it. Just example. What should I do? Sir, what is your company? My company is equal to XYZ Limited. What do you do? There is one guy, Mr. A is there. What is his basic plus DA? Basic plus DA is equal to 1 lakh rupees. Example. Okay, now into 12%, how much? That is equal to 12,000 rupees. What company does? E-company will go to Provident Fund. Okay, one government department of Provident Fund ko they will go. They will deposit 12,000 rupees with the Provident Fund authority. They will give the money. That's all. Afterwards, what happened to this 12,000 rupees? Why should I bother? Correct na? Once I make a contribution, no. Now headache starts for whom? Employee, Mr. A and the Provident Fund. Correct na? Yes. So who will collect the money from the Provident Fund department at later point of time when once he retires the job? This employee will approach the Provident Fund authority. He will get the money from the authority. What about me, XYZ company? I don't care. I don't correct. I don't need to bother about this. I hope you understood. So that's why. So what has happened to fund? Is it gone up by 8% or 10%? Why will I bother? What is my job? Contribution करना कर दिया तो क्या हो रहा है मुझे क्यों correct ना that's all I just don't need to bother about all those things that is contribution plan where I don't have any investment risk no actuary risk nothing is there when do you say it's a defined benefit plan defined benefit plan it is a promised benefits okay you have a company has promised the benefits what do you mean by promised benefits I'll take care of it how much you will pay yeah this is for this best example no best example is equal to gratuity yeah how gratuity what is the gratuity payment you know the gratuity payment as per the gratuity act that is lost drawn salary you must have studied this in the income tax at least somewhere correct na into 20 correct now what is that my dear 15 divided by 26 correct na 15 divided by 26 into number of completed years of services. What did I say? Completed year of service. This is the amount you are supposed to pay. Now answer my question. Now suppose there is a Mr. A. Yeah. Sir, what is Mr. A? Mr. A today joined. Okay, which day, sir? That is 2024, first April he joined. How much is his salary today? Yeah, how much is his salary? Sir, his salary is equal to, say, per month salary is equal to 40,000 rupees, sir. Correct. How many years is he expected to work? I am expecting he is going to work for 6 years. Ah, not a problem. Now tell me, what will be the last done salary for this guy after 6 years? How do I know? Accountant or astrologer? Huh? Correct, no. Are you accountant or astrologer? How do I know, yeah? Correct. I can imagine something, but that is not true, no. Agree. Suppose I'm expecting it will become 65,000 rupees करके मैं expectation किया. Correct. Last day में क्या हो सकता? इस 65 may become 165,000 also. This may become 55,000 also. Possible, not possible? Possible. Yeah, he may perform extremely well and he may become he has become CEO of the company only. Possible. Correct. Na? So how do I know? Suppose if it goes up too much high, correct na? Your estimation was, what was your estimation? Based on 65,000 you said this amount will come करके एक number provision कर दिया. कल इसका salary has gone up like anything, drastically it went up like that. Now company will undergo for a extra payment. Correct. Now what you expected is some number, you expected this much, you are supposed to make this much of payment. That is called actuary risk. Correct. Now who has a risk? Correct. Are you depositing with Provident Fund account? The Provident Fund department will take care. Nobody, you are not depositing anywhere. Nobody will take care. You are only supposed to take care of everything. Got my point? That is. So, correct. The number of years of completed service. How do you know? 6 years he may work, 16 years he may work. He is a young fellow. Correct. Na? He wanted to be CEO of the company and he wants to continue there only. Could be. No, correct. No, nobody knows about it. Right. And again, is it for only Mr. A? Na? Correct. Now, if you go to Infosys company, 10 lakh people are working there. Out of 10 lakh people, how many people will leave? How many people will continue? What will be their growth in the salary? How will be the market condition? How many people may die in between also? Yeah, he wanted to stay. Right. Do you know one concept? Lost done salary, normally gratuity, no? Correct. Now, normally gratuity, you are supposed to pay only when somebody works in completed 5 years service. If he does, you are supposed to make a payment of money. Agree, na? If he works for less than 5 years, company does not have an obligation. Suppose you left after 4 years, company will give you gratuity. 1 paisa also they will not give. Suppose there is one Mr. X. He worked for 3 years. Okay, Papa, he died in between. He died. You understood my point? He died. Possible, correct, a human, na? Yeah, correct. Nowadays, like, very small kids also, 24, 25 also, heart attack, dhamal. You must be reading the newspaper also. Right? Some death, though, that is correct. Now, without notice only it will come. Not income tax notice, correct? No? This is different. So, this is 3 years, 3 years in between only he died in the company. Now, are you supposed to pay him gratuity? You have to pay. That is gratuity act में ऐसा बोल रहा है. You have to pay him even if he did not complete 5, in case of death only, not in any other case. You left another company, get lost, bye bye, I'll tell. If somebody died, even though completed less number or less than 5 years of time, then yes, it is an obligation for the company to make a payment. Yeah, so that's why out of 10 lakh employees, how many may die? Also, you are supposed to imagine. Correct, na? Even though they did not complete for 5 years, still you may end up paying the gratuity for them. Yes, that also you are supposed to take into account. Right. Next, suppose I'm example, I'm thinking 1 crore rupees gratuity I may need to pay for all these guys together. Something is a socha. 1 crore rupees you are supposed to pay. Correct, na? All of a sudden, many people come and say, sir, I want to leave now. Pay me my money. It becomes a problem. That's why what people will do, people will fund it. People will fund it in the sense what? Yeah, they will open one trust, gratuity trust. They will forward the 1 crore rupee fund to this trust. Suppose 1 crore I am supposed to pay you. When is expected to pay? Then after 4 years or 5 years or 10 years, I am supposed to pay. Correct. Now what you will do? 10 crore rupees or 1 crore rupees I will not deposit. I will pay only 80 lakh rupees or I will pay only 60 lakh rupees of money I will pay to the fund. What this fund or trust will do? They will deposit. Yeah, they will deposit not in the bank. Okay, bank may also they will deposit. Government of India bonds also they will purchase. They will go and put their money in the share market also, as per the trust act. Okay na, permitted as per the trust act. They will deposit the money in the market also, they will get good return. Correct na? Ha, see, if it earns 80 lakh rupees, I have done two, by keeping in, correct na, I am saying, like, say 10% is a crate milega, so that I, by the time these guys started leaving now, I will get my 1 crore rupees milega. Even 1 crore rupee I will make a payment to employee, something I thought like that, and accordingly I have deposited the money. Understood? Now, what is happened? I thought 10% return will come, but maybe practically I might have got 12%. Like, see, now market is going up like anything, right? Or maybe my fate is not good. It must have gone to 6% also. Correct na? 80, I thought 1 crore it will become. It didn't become. 94 lakh rupees only it became. Now, employees have come and said, boss, I am leaving now. Are you supposed to pay them money? Yes, as per the agreement is not based on your return on the investment. You have already promised that lost and salary into 15 divided by 26 into number of completed years of service करके ऐसा बोल दिया. You're supposed to make a payment to them. So that's what investment किया. Investment risk is with the company. If it goes well, nice. If it did not goes well, my problem. Correct. Actually, I have estimated 65,000 of salary. It went to 165. My risk only. Correct now, or it is went down. Yes, plus or benefits, risks and rewards of this is lying with the employer. Then it is defined benefit plan. What is it called? Defined benefit plan, wherein I contribute and my job is over. Then it is defined contribution plan. I hope you understood. Yeah, I'll just close this with the defined contribution plan accounting. Sir, what will happen with respect to this accounting? My dear, this accounting is same as STEB. What is STEB? Short term employee benefit. Short term employee benefit concept में क्या पहुंचा? Correct now, what did I say? Whatever is as on balance sheet date, is it something payable? Regard as a liability. Is it already paid excess? Regard as a prepaid expenditure. Right. P&L में क्या बोला my dear? Generally it will be charged to P&L, subject to permission by another accounting standard, like intangible asset and development of something. Correct na? If this is a provident fund payable on behalf of a scientist, then yes, it is going to be, it may be capital, it will be capitalized along with the development of intangible asset. Okay, it depends, mind. It obviously it keeps on, right, changing. So this short term employee benefits, how you accounted, how I taught you, same thing is going to be followed with respect to DCP, defined contribution plan ka same thing. Okay, that is tomorrow on the next class may I will be explaining you defined benefit plan, plan ka concept. I am going to make it very clear to you, right? I hope you enjoyed the class, right? If you like and if you feel useful to you or your friends, please share it, and yes, subscribe to the channel. Yes, you will get a notification whenever I come online. Okay, and remember this, my dear, these are the classes which are earlier it was not available, now I made it available, right? These, I mean, number of people, students, actually 20 days or 22 days may I have heard from students, not only, okay, practically people will be able to revise 100% of my syllabus, my classes. They'll be very happy with it. Right, wish you all the very best. Right, see you soon in the next session.